Okay, hey everyone, it's Downtown Josh Brown. I am here with my friend Dan Ives. Dan is the Managing Director and Senior Equity Research Analyst covering the technology sector at Wedbush Securities since 2018. Dan has been a tech analyst on Wall Street for over 2 decades, covering the software and the broader technology sector. Dan, you have become highly synonymous with the AI revolution and the Nvidia story. Of all the people I could think of who have been bulls on Nvidia, you have probably been bullish for the longest, and the magnitude of your bullishness has probably been the closest to really capture what the opportunity has been and will be with this stock and just the general investing theme. Nothing I heard on the Nvidia call Wednesday night changes any of that. And I don't think it's changing anything of that for you either. But if you want to just start off, give me like the broad strokes on what we heard, and then we can get into some of the individual takeaways.
Yeah, and thanks for those words, Josh, and from meeting fun. Look, as me and you have talked about a lot, like it's all about putting the data points together. And you come out of that call, I'm actually saying incrementally more bullish, not even just on NVIDIA, but on the overall AI theme. Because of the Blackwell delays, if there was going to be one, what I view headwind or black cloud, they put that to rest in terms of yields and any of the issues there. Demand's outstripping supply anywhere from 10 to 15 to 1.
Right.
So when I look at the underlying enterprise demand, not just in big tech, but even like when you look at sovereign and you look at what I think ultimately is going to be the rest of sort of enterprise, this is a story I still view, call it bottom of the first, top of the second inning. I continue to view it. It's LeBron in high school and Akron.
So you really do still believe it's that early?
We're only 3%, maybe 5% tops of enterprises globally have even gone down this path.
Right.
So it comes down to like when, sometimes I think like it's very easy, like not see forest to the trees, like in terms of like, okay, October quarter, 32.5 billion, whispers 33 billion. But now the focus is more like, this is a company ultimately going toward 50, 75 billion, eventually 100 billion per quarter.
Yeah.
And I think that, to me, is really the trend, not just for NVIDIA, but for what this means for the rest of tech.
So I want to quote you. This was the opening paragraph of your post-earnings research note. NVIDIA's earnings last night was front and center globally as the godfather of AI, Jensen, are the torchbearers of this AI revolution. The tech stalwart delivered massive, quote, drop the mic numbers yet again that easily beat the street, with a top line that grew 122% from a year ago quarter, with 30 billion of revenue and a robust outlook for the October quarter of 32.5 billion, 80% growth. While some buy-side whisper expectations were a tad higher for the October quarter, we believe NVIDIA's surging AI chip demand, Blackwell delay concerns allayed, robust outlook, and a meteoric enterprise pipeline speaks to this AI revolution just starting to kick off its next phase of growth. I think a lot of people had that reaction, but the stock price didn't. What do you think is the main reason for why we saw NVIDIA sell off almost 6 or 7% in the immediate aftermath of that report?
I just think it's like people expect Djokovic to win 6-0, 6-0, 6-0.
Yeah.
If it's 6-3, lost 3. So the point is like you're expecting like, okay, could they give a 34 billion number? Just another. It was basically what I view as call it, $500 million higher than sort of base, maybe a little below whisper. I think it ends up probably being closer to 34 billion number. Because I think now NVIDIA recognizes when you're in this parabolic growth, especially with Blackwell, there's no reason for them to give a 34 billion, even though I think that's ultimately where it goes.
So you think we've gotten spoiled, and it's still an incredible growth story, but maybe the expectations were fully baked in, at least for this particular quarter, not for the long term.
And I think when now it's going to start to happen, Josh, at that point, the next month, and we'll be in Asia next week. Anyone that's doing the Asia supply chain checks, it's actually increasing in terms of demand over supply. All of a sudden, what starts to happen is next drum roll starts. Hold on a second, 32 and a half, probably a sandbag number. All of a sudden, stock starts to, what I believe, continue to creep back up. And I believe we're looking $4 trillion market cap for Nvidia in the next 6 months. I just don't see what's stopping it, given all the demand we're seeing from hyperscalers, from enterprise. The use cases now are exploding. That's why Palantir, people dismiss them as that. Look at them. Look at ServiceNow. Look what we're seeing with Oracle. That to me is the next phase, the use cases. And Jensen hit on that a bit.
I want to talk about demand. This is you. You said there will be a time that competition from AMD and others ramp up, but essentially a $1 trillion of AI CapEx over the next few years is coming its way. And last night's conference call further confirmed this demand outlook. The stage is set for tech stocks to move higher into year-end and 2025, in our opinion, as the Fed and Powell kick off its rate-cutting cycle. Macro soft landing remains the path, and tech spending on AI remains a generational spending cycle just starting to hit the shores of the tech sector. We continue to estimate for every $1 spent on an Nvidia GPU chip, there is an $8 to $10 multiplier across the tech sector, which speaks to our firmly bullish view of tech stocks over the next year. So you're very constructive on tech going into year end and heading into 2025. And that multiplier effect, because of the GPU spend, means a lot of opportunity for a lot of stocks, not just Nvidia.
That's exactly what we really want is, and what we talked to investors about is the multiplier. Because everyone, it's Nvidia, it's Microsoft. No, this now kicks off a cycle we basically have never seen before. And anytime someone puts like the Cisco comparison to Nvidia, show the chart, it looks the same. I covered tech back then. The difference is Cisco, 90% of their customers were essentially leveraged startups, Aethers, and all the CLEX. Who's the customers of Nvidia? It's companies with 1.2 trillion on the balance sheet.
And governments.
And government. So my whole point is that I get the comparison looks great in a chart. Apple Store. You cannot compare what we're seeing here. It's essentially a fourth industrial revolution. That's being built out. And I think now it's the next phase. It's the software players, it's the infrastructure, it's other parts of semis. It's names like AMD. It's names like in cybersecurity. How are you going to protect the workloads? So that to me is really where I see everything. That's why I'm so excited about second, third, fourth derivative.
You've made this point, and so has Jensen Huang, about sovereign AI and every country, for security and for cultural reasons, having its own AI that's almost like purpose built for the nation in which the people are going to use it. Is that opportunity being underestimated currently when you look at the valuation of AMD, Nvidia, Dell, Hewlett? Like, do people not fully appreciate the extent to which AI is like a must-have as opposed to a nice-to-have?
Yeah, and I think that's a great question. I think actually the biggest thing that's not being priced in, the tech CapEx from the stalwarts, priced in. What's not being priced in is the incremental spend I think you're going to see from tech, the incremental spend we're seeing from enterprise and governments. I mean, just if I look on typical enterprise and you think government 8, 10%, sometimes 12% of overall spend, that's not numbers.
Yeah.
So as this all plays out, and any company, any government, it all starts with the red phone. It's Jensen. There's only one. Where are you getting the chip? It's a new gold. It's a new gold, new oil.
Yeah. So I want to ask you about the difference between selling a chip versus selling an ecosystem and services. So I think a lot of people who are not experts in semiconductors, but they vaguely understand, like Intel sells a chip, great, they sell a chip. In the case of something like this, there is a continued spend after you sell the GPUs on system maintenance and on services revenue and the software platform. Can you explain for the
Sure.
viewers who aren't really like on the ground here how this works?
Yeah.
It's not just as simple as, oh, how many chips will they sell? It actually ends up looking more like Apple. Yes, they sell a lot of iPhones, but then what else happens on the revenue side after that sale?
Yeah. And I think Apple's a great comparison because I think the big, and let's just compare it to Nvidia. Many viewers, oh, it's iPhone. Yeah, that's ultimately, what this company does. The biggest part of the valuation change in Apple has been services. That's where I believe that's worth 1.7 trillion.
Yeah.
When you look at Nvidia, it's not just chips. When you look at the overall platform and architecture, this is essentially companies that like, okay, we're going to buy the drink, we're going to buy the meal here, but now we're going to have to pay them an incremental 35% every year, essentially in perpetuity on services, as well as on infrastructure and on software.
Right.
That's the difference.
Yeah.
So when you think about it, see, like Intel, the reason Intel, if you looked up disaster in the dictionary, you'd see their ticker, is because they never understood, whether it's the bureaucracy, they've lost the talent, whatever it may be. Jensen always understood the prize was not just about coming up with the chips and the GPUs. It was about the overall architecture. And that's why when you look at what they've done, they've essentially courted it. In other words, this should almost be like going to a baseball game and any meal you buy, any drink you buy, goes to the same vendor.
Right.
Eventually.
Right.
That's kind of what they've done from an AI perspective. But now who builds on top of it? It gets built on a hyperscaler, Microsoft, Amazon, Google, the apps, ServiceNow, Salesforce, Workday, Palantir. That species second, third, fourth derivative all being built on top of what Jensen.
There's a switching cost too. If you have built your AI services on Nvidia architecture, it's not as simple as AMD has a 20% cheaper chip. We'll just start swapping them in. I don't think it works that way. Am I right?
It would cost it could cost potentially 2-3x to switch.
Right.
The switching costs are they're just almost impossible. And look, and that's no different than Oracle, Microsoft, SAP, Dell. I mean, you go down the list.
You standardize.
That's what you standardize, and not just that. Your IT professionals are standardized. Your users are standardized. The apps are standardized.
Right. I want to roll through some charts because the fundamental story here, like getting away from the technology edge, which I think everyone understands, Nvidia is miles ahead, but just the execution as a public company is really breathtaking. The first chart that we have up here, I think you can see this, Dan. This is 62.1% operating margin for Nvidia's Q2 2025 fiscal. So that's what they recorded. So the blue bar, you can see that they're making huge investments, but their operating margins are staying in the low to mid 60s. They're not falling off at all, and they are significantly higher than where they were 4 and 5 quarters ago in the 50s. I don't think we've ever seen a company be able to do this.
And guess what? If they weren't investing just massively, they'd be like major senior citizens living in Delray Beach,
like
in
80s and
70s,
80s and 90s.
Yeah, exactly. They'd be 70s, 80s. I mean, the point is that that's the thing that's underscores that essentially the margin profile has doubled. And now once this massive spending even starts to abate and they've invested, this is a margin. It's a free cash flow rent. It's a store. And that's why I continue to view it as like, you start to look out here, $5, $6, $7 of earnings. Tell me it's expensive. It's just hard to see that just given the scale.
Okay, let's look at the revenue. So this next chart is quarterly revenue hit $30 billion in Q2 2025. That it looks as though, based on estimates, it's going to 32.8 next quarter, 36.2 in 2 quarters from now. And, again, it's really almost inconceivable to have a company continue to ratchet up the revenue to this degree long after it's become the largest company in the world. And they're doing it. So like somehow these are quarterly numbers. So we're looking at like a company that's already above $100 billion annual run rate, and it's not stopping.
Well, no, based on all the math, 250 type of annual is where it's head. It's like I don't see how it almost doesn't go there, just given the overall demand, because all these CapEx dollars, they're all coming into the doors of Jensen Nvidia. Now you could be like, okay, AMD, they get 10% share, but that's not changing the story because of where the spending's going. And now, and this is very important, what Jensen talked about in terms on the call, and we've seen it from customers, the use case, the ROI, as the use cases explode, that's the train. Nothing stops the train.
I don't have this chart with me today, but we used it on the channel a couple of days ago on What Are Your Thoughts? But we have a chart that shows the top 5 customers of Nvidia, and on one axis it's showing the dollar amount that and the percentage of their own CapEx, and then on the other axis it's showing what percentage of Nvidia's revenue is. So in other words, I think Microsoft, it's something like 45% of their CapEx dollars are going to Nvidia, which comprises 19% of Nvidia's revenue. That's the part that the bears would say is the shakiest foundation, like is the least sustainable. But you don't agree with that. Make us feel better about that level of concentration. Maybe it's an end user story and the hyperscalers are just in the middle.
In other words, the hyperscalers where Microsoft is, that's 95% of enterprise. In other words, like if you're a Microsoft shop and you're going down this path, it's going through Microsoft. There's no one else that you're going to go through. You're going to go through other hyperscalers, whether it's Google or Amazon. Yeah. So when you talk about concentration today, that actually is more, I think that's actually more like perception, because it's not like it's Microsoft itself as a customer.
Right.
You have to then go down to the thousands of enterprises. So that doesn't really tell the story, in my opinion. It's really about the end user. And as this all plays out, hyperscalers are really almost like a middle man.
They're passing through the compute that they are purchasing from Nvidia.
And it's all right. If Josh Brown then puts an order through Microsoft, Microsoft puts it through Nvidia, the order comes through Microsoft, but the actual order came through me and you.
That's right.
And Josh, like one of the things, and we'll be in Asia over the next few weeks, everything we see, demand from a component perspective is increasing. And when I talk about bears, I always say, like, the bears can find the AI revolution in 10-4 of their New York City office building, Metro North Jersey Transit, or the spreadsheets. And I think that's where many have missed it, especially now as Apple. What's been missing? The consumer piece. Now you have iPhone 16, you have the consumer revolution, you have 300 million iPhones, haven't been upgraded in 4 years. That all now comes through. Apple, eventually OpenAI, and then eventually, obviously, Nvidia is going to be a huge benefit.
So we're going to go back to Apple in a second. I want to ask you about Blackwell. You mentioned it at the top of the show. So Blackwell, for people that aren't aware, just correct me if I'm wrong about this, the current cutting-edge standard system that NVIDIA is selling is Hopper, and the next iteration, which Jensen Huang referred to as a step function change above, is Blackwell. And one of the concerns going into the call is that Blackwell was not going to come out during the quarter where people originally anticipated it. And he went out of his way during the call to make it clear to the sell side, Blackwell is not delayed because we're making changes to its functionality. It's delayed because a new mask What does that mean for the investor who's not an engineer?
I mean, essentially, they've increased yield, and from a technology perspective, they've actually become that much more efficient in terms of how to produce it.
Okay.
So the concern was like, oh, this is a delay. This could spoil the party. And the reality is, you're only talking about a few months, and they've actually, through this process, made it better. They made it more efficient. It's made more profitable from a margin perspective as they produce it. Now, they talked about like, okay, billions in demands. I mean, Josh, this is, in our opinion, tens of billions. And this is just really the start of the next leg of that story.
So pushing the shipments of Blackwell into Q4 does not alter the demand side, doesn't alter the earnings expectations materially. It's just something that happens when you're launching a new wave of technology. It doesn't necessarily hit a certain date on the calendar every time.
And also, the last thing that they could ever do is come out with something too early, bugs or whatever it may be.
Yeah.
They got to make sure that this thing is golden. And that's why, because all the infrastructure is built on it. And then the fact that they actually are going to see some in the October quarter, that put that to rest.
Yeah.
And that's, look, I just think we sit here, we sit here over the coming weeks, over the coming months, and the stock's all-time highs because it's like, I think as more start to do their checks, they realize like, whoa, demand's not just Mag 7, it's actually other enterprises and sovereign. And remember, you haven't even tapped into Europe globally. We're really talking essentially right now. It's much more of a US centric story with some China outside the sanction.
I want to ask you about the financials. They announced a new $50 billion buyback on top of a pre-existing authorized $7.5 billion buyback. I would ask you, would it make sense for them to actually act on this authorization or just keep it in their back pocket in case there's some sort of like market-wide sell-off or something? And then the second part of that question is, are these true buybacks or like to shrink the float, or are they just being used to sterilize stock-based compensation and new share issuance?
Well, look, I mean, I don't think that press release buybacks, like in terms of just like, sending a signal type thing.
Right.
I do think that they've recognized some of the volatility that they could see. I think that, the Black Monday, Tokyo scare, a little sort of, clearly got in front of their radar, in my opinion. So it's a true buyback, but the reality is that when you look at AI engineers in the world, the best right now, it's really Nvidia, OpenAI, Microsoft. So as much as people could fret about like options or whatever it may be,
like new stock
it's what
issuance as compensation.
They have to keep the AI engineers because that's ultimately key to their success. But it's actually an incremental buyback. I think they're going to go right off the page of Cook and Apple. They're going to actually implement it, and then eventually, in a year or two, we're not talking about $50 billion. We'll be talking about $7,500 billion type buyback.
There's just too much cash flow. They have to do something with it. You can't just plug it all back
into
CapEx.
Exactly.
Okay. Let's put up this earnings chart. So this is the quarterly earnings. Hit 68 cents in Q2 2025. This is consensus estimates, not your estimates, Dan. But we're at 74 cents for next quarter, 80 cents for the following quarter. Are you above this? Are you below this? Where are you versus consensus?
I mean, look, we ultimately believe above where $1.25 is really going to be the run rate per quarter. So in other words, like you're going to now start to look at out year when you look at 25 and 26, $5.50 per share. In other words, like that's real. Like if you're buying this stock, you're basically the number that you're focused on is $5 of earnings power. Like that's how I think that. And if you look
like
historically
on an annual run rate,
on an annual basis,
yeah.
Because also you're looking, most investors that are in this name and broader, you're looking at like, okay, when does Blackwell ramp? What does true numbers look like when this is actually at scale? And $5 is really the number, the out year that I think from a buy side or whisper. So that's why when you look at some of these, it, it it's really focused on where this is going next 12, 18 months. That's why it's we talked about, like Apple WWDC, pairs come out, stocks 190. There's nothing here about it. And it's 230 today, right? 2.5 months later. So my whole point is like the initial knee jerk on like some of these things. Sometimes like the story is, I think, lost in terms of what's actually happening, not just for Nvidia, but for broader tech.
Yeah.
In terms of that multiplier, the $1 to the $8 to $10 multiplier, which I think is the most important thing for the broader tech.
So on a $5 annual run rate in terms of earnings power, you
25 times. Yeah.
25 times. Where does that put the stock? I didn't major in math.
And then you start to look at like 125, and then ultimately you're like, look, you start to actually 525 earnings. Could you get to 150, 175? And I think the bull case getting to 150, 175, it's really like, okay, I'm looking at this next 2-3 years. This is a company that could have $5. They have $6 of earnings power as this all plays out. That's sort of, if you're longer term, that's the bull case as this all starts to play out.
I want to hit you with one more. This is via the Wall Street Journal, but widely reported. The world's biggest tech companies, including Apple and Nvidia, have been in discussions about investing in OpenAI. The maker of ChatGPT is looking to raise several $billion in a new funding round that values it at more than $100 billion. OpenAI is in an arms race with heavyweights such as Google and Meta, seeking capital to maintain its lead in the competitive artificial intelligence space. Apple and OpenAI recently announced a partnership, and Nvidia is the biggest supplier of AI accelerators powering ChatGPT. OpenAI said the number of ChatGPT users has doubled in the last year to over 200 million weekly active users. More than 90% of Fortune 500 companies are currently using OpenAI products. Okay, so if Nvidia makes an equity investment into OpenAI, effectively, OpenAI is just taking that money and buying more chips from Nvidia. So, like, it's almost like a no-brainer for them to be involved in a funding round. What do you think about it?
I mean, I think it's the golden child. Everyone, like, when Nadella did and Microsoft did the round, everyone realized right away how basically like they strategically massively missed this. No one's going to miss it again. Okay. And especially when Apple, when you think OpenAI, just how important they are strategically, not just an iPhone 16, but the broader AI strategy.
Right. Anything we missed in this conversation before I let you run?
Look, I think, Josh, the biggest thing is like for anyone watching, it's about multiplier. It's not just about Nvidia. It's not just about Godfather of AI, Jensen, the black leather jacket. It's about the dollar creating the 8 to 10. That's how you get the NASDAQ 20,000. That's how this bull market, where all of a sudden some mid-cap name, you're like, oh my God, they just beat earnings by 20%. Then on the call, like, well, AI spending, that's how this starts to play out.
Dan, I really appreciate it. I know my audience absolutely loves hearing from you, especially in the wake of such a big, momentous earnings report. I want to wish you all the best on your trip to Asia this week, and we will definitely check in with you again this year.
Great. Thank you so much.
All right. Dan Ives from Wedbush. Ladies and gentlemen, follow him, of course, everywhere. Thanks so much for watching. Thanks so much for listening. We'll talk to you soon.